Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify or wherever you listen. It's Thursday, the 13th of June here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, the Fed signals that there will likely be a single rate cut this year, but keeps the door open to a second.
G7 leaders reportedly agree to tap frozen Russian assets to support Ukraine.
Plus, private equity in focus. Bloomberg learns Labour will target carried interest in today's election manifesto.
Let's start with a roundup of our top stories. Federal Reserve officials have walked back their expectations for interest rate cuts this year. Updated economic projections from policymakers show borrowing costs being lowered only once in 2024. That's down from 3 rate cuts previously forecast. The Fed held interest rates steady at the meeting. Fed Chair Jerome Powell says the central bank is taking a cautious approach.
We don't make decisions about future meetings until we get there. I think in terms of what we need to see, we want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data.
Powell's comments came after figures showed core CPI cooling for a second month in a row in May to 3.4% year on year. Despite Powell's caution, investors are still pricing in more than 40 basis points of easing this year.
G7 leaders are set to back a deal providing Ukraine with $50 billion of aid using the profits from frozen Russian assets. According to a French official, the technical details need to be finalised, but the aim is for funds to make it to Kyiv by the end of the year. The news comes after months of wrangling among US and European allies about how to use the profits generated from roughly $280 billion in frozen Russian central bank funds, mostly which are stuck in Europe.
Bloomberg has learned the Labour Party is expected to alter some tax rules for private equity fund managers if it wins the general election. Changing the tax on carried interest is one of many measures being closely watched when the party's manifesto is published later today. Labour leader Keir Starmer says his party's strategy on the economy and business is working.
I concluded that I should listen to the electorate, and when you lose that badly, you don't look to the voters and say, what on earth do you think you were doing? You look at your party and say, we have to change.
Starmer's manifesto looks set to reiterate key pledges, including a cap on corporation tax at the current rate of 25% and a commitment not to increase income tax, national insurance or VAT. But the Institute for Fiscal Studies says that there is an inevitable choice coming on either cutting spending or raising taxes, no matter who wins the general election.
The French President Emmanuel Macron insists he won't step down even if his party loses upcoming legislative elections. France is holding its 2-round parliamentary vote starting on the 30th of June. Macron's political rival Marine Le Pen is leading polls by a wide margin with her far-right National Rally party. Speaking at a press conference, the French president sought to dispel rumours about his future.
It's absurd. I believe in the strength of our institutions. I do not intend to campaign more than I did for the legislative elections of 2017 and 2022. But I thought that in today's circumstances, it was important to set the course and the method.
President Emmanuel Macron speaking yesterday. His speech comes after French bonds tumbled on Tuesday following reports the president had discussed resigning if he suffered a big defeat in the elections.
Elon Musk is being sued by a group of former SpaceX engineers for sexual harassment and retaliation. The complaint has been filed in a state court in California. Bloomberg's Tiwa Adebayo has the details.
8 former employees claim Musk knowingly and purposefully created a hostile work environment. They say he brought vile sexual photographs, memes and commentary that demeaned women or the LGBTQ community into the workplace. The workers wrote an open letter in 2022 raising concerns about Musk's behaviour and say they were fired in response. The same group of employees have already complained to the US National Labour Relations Board. SpaceX and Elon Musk haven't commented on the lawsuit. SpaceX previously denied wrongdoing and said that the fired employees violated policies. In London, Tiwa Adebayo, Bloomberg Radio.
Now, in a moment, we'll bring you more on the Federal Reserve rate decision, the dot plot, and we'll look ahead to the much anticipated launch of the Labour election manifesto. But first, another story that caught our eye about how demotivated workers are in the UK and how much of a crisis that is because of the cost to the UK economy. So this is research from Gallup. It shows that only 1 in 10 UK workers are classified as engaged at work, i.e. putting in discretionary effort on the tasks that they're asked to do.
I mean, that's already the definition I have issues with. You know, you're paid to do a task. Going above and beyond is not what you're paid for.
Okay, well, that's one definition. On the other hand, it's a huge blow to the economy because it's really costing the economy £257 billion. That's the figure that's been come up with. Our colleague Irina Angel has been writing about this. It's the potential output miss for the UK. It's basically about quiet quitters. And also, I think overall, when you look at how engaged people are at work, it always makes me slightly scared because so few people are. Even across Europe, it's only just above 20% of people who are like fully engaged in their work, which I think is a real shame. So that is still half of that level in the UK. Normally, we talk about productivity being about how much machine equipment and IT equipment the company buys, not usually about individuals.
Yeah, I was interested to see in this research when Gallup spoke to people who didn't feel motivated at work, a lot of what they put that down to was a lack of clarity about what needs to be accomplished. And part of it is also, so part of that is kind of poor management and things you find in an individual job, but part of it's also the big macro situation facing the UK. You know, things like Brexit or the pandemic or just general macroeconomic uncertainty leaving people feeling unmotivated.
Yeah, which is a real issue economically overall and for workers. Have a read of that story on the Bloomberg terminal this morning from Irina Angel. Really nice piece.
Let's bring you more now on the Federal Reserve decision yesterday. Policymakers dialing back expectations for interest rate cuts this year to just 1 versus the 3 that they previously indicated. Our managing editor for FX and Rates, Rachel Evans, is with us for more. Morning, Rachel. Can you talk us through, first of all, I suppose, what we learned about the Fed's expectations for the rate path ahead? How much divergence is there among policymakers?
Yeah, well, I think that was kind of something that we were really focused on heading into this decision, was where the Fed was going to come down in terms of its dots. And we finally have an answer. They did indeed scale back their expectations for cuts this year. We were coming into the meeting with 3 cuts projected by the Fed. Well, they're now projecting 1 cut. But what was interesting to me was some of the discussion afterwards in the press conference around how much the CPI print really influenced policymakers in actually casting their votes for the different cuts. He basically indicated that while some did sort of factor that into their consideration, most didn't. And I think that's kind of why you saw sort of the market reaction that we had yesterday with very much the CPI print from the morning actually kind of carrying through to the afternoon and being far more of a sort of presence for the market than the Fed meeting ended up being.
Yeah, which we were discussing yesterday, weren't we? That was the big sort of question mark. In terms of the expectation then for the inflation path, that is also very interesting. I mean, the CPI number coming in kind of cooler than expected, but what do we see going forward? How much of a blip is it?
Yeah, I mean, the Fed has kind of been sticking with this mantra of the fact that inflation is coming down, and they've been, not at all shy in expressing in past meetings that they've been frustrated at that pace. It really has been incredibly glacial. But yesterday, I think, was kind of an example of where they want to see things heading. It's not necessarily where they want to end up, obviously, and I think that's why they were a little bit coy about the exact timing of their first cuts. Powell kind of really did leave on the table at the press conference the fact that you might see 2 cuts this year rather than just the 1 kind of projected by the dots. But there's no doubt about it. We did see kind of core inflation coming down more than expected, and that was enough to kind of send the market into a bit of a tizzy, really, and we saw a big rally off the back of that.
Yeah, so the as you say, the May number cooler than expected for the second straight month. What are the expectations, though, from the Fed about where the the inflation path goes from here now? Because they had, I suppose, upgraded or raised that in the projections too.
Yeah, absolutely. And the market reaction, I think, very interesting in terms of the bond market reaction, but also the reaction from the dollar.
Yeah, I was really watching the dollar because I think you had kind of this sort of slight division really between kind of like the path of treasuries and the dollar. The dollar wants to see kind of like rates staying higher for longer. The treasury market wants to see cuts coming immediately. And you saw kind of an interesting reaction as a result yesterday. The dollar did slip, but not significantly. It was down about 0.2% yesterday, and it's up again today. So I think everyone kind of got a little bit of what they were looking for in the two different events. You know, the treasuries traders were looking to the Fed saying, yeah, cuts are coming, you know, don't worry, and looking to the inflation and thinking, well, they can cut even more than they're saying. And the dollar was really listening a little bit more to the Fed and thinking, actually, maybe they won't even go till December. We've got time to keep piling in.
Okay, Rachel Evans, thank you very much for joining us. I'm managing editor for FX and Rates. Rachel Evans there looking at the market reaction to yesterday's Federal Reserve decision as they've now signalling that just one interest rate cut this year. Just looking at market pricing this morning for the Fed as well, we're looking at about 43 basis points priced in for this year, so not quite at fully 2 cuts, but certainly leaning in that direction.
Yeah, absolutely. Right, let's turn from economics to politics in the UK. The Labour Party is launching its manifesto today with key measures on taxation likely to be in focus. This after leader Keir Starmer promised to put economic growth and wealth creation at the heart of his party's plans. Our UK politics reporter James Walcott joins us now for more. Bloomberg has learned more about what might be in today's party manifesto. What exactly do we know, James?
Well, so we're told that there may be some reference to fixing what some, including Dan Needle from Tax Bar Associates, have called the carry interest loophole. Now, they use the word loophole. That's not always agreed. But the point being is if you work in private equity, you can effectively take your stake of the profits of what you make and use that as your income, claiming it as capital, which is taxed at 28%, as opposed to income, which obviously if paid at that level, you'd be taking it a 47% marginal income tax. And so it's something that Rachel Reeves back in 2021 has said she wanted to look at. And given what we know about the Labour Party positions on tax that we're likely to see in this manifesto, you know, no national insurance raises, no income raises, they're expected to say that, as well as no corporation tax raises and VAT rises. There are big questions about how they would raise this stuff. They've refused to rule out in the past capital gains tax changes. So the detail of quite what could come, Caroline, could be built into capital gains tax changes, or it could be specifically for this carry interest loophole. But it's something that, look, Labour have made a big pitch to win over business and to win over finance. And although private equity is a subset of finance, it's something that I think some private equity traders might wake up to read Bloomberg this morning and be a bit surprised by.
Okay, so we have, I think, a fair picture there about what the tax changes could possibly be in the Labour manifesto. James, what else should we be watching out for when this announcement is made?
It will be interesting to see if there are any surprises, because the Labour team have been quite clear that we shouldn't expect any. They don't want to scare anyone. They are 20 points up in the polls, and they would quite like it if it stayed that way. And so a lot of it we already know. They want to say growth is their number one priority. They want to set out their retail offering, economic stability, NHS waiting lists, a border security command, antisocial crackdown, 6,500 teachers. For the business side, they want to talk about a national wealth fund, GB energy, a 10-year industrial strategy. And then on the more controversial side, the stuff that isn't mentioned as much but people at Bloomberg care about, we have workers' rights reform, issues around housing planning reform, 1.5 million houses potentially, and looking at renationalising rail. That's all already announced. And anyone who reads the financial press probably already knows about it. And so that will all be in there, and we will be hoping for more detail. But I think the thing we have to know is that the political momentum from this campaign has been that the Labour Party are 20 points up in most polls, and certainly in Bloomberg's composite index of the polls. And the momentum that gives them is to give less on detail and more on sort of vibes, to put it sort of bluntly.
Okay.
And so they've set out their growth missions in the past. The question will be is how much they're willing to put all that in black and white in ways that it can be held accountable for a 5-year term.
Yeah,
if they were to win, I would say.
Yes, absolutely. There was also, of course, some interest yesterday evening because you had Keir Starmer and Rishi Sunak again doing big sit-down interviews, more media. You know, that the days are ticking by, getting closer to the actual vote, which is interesting. But as you say, the Labour Party specifically trying to be very, very cautious. Do you think that causes them any problems?
Well, I mean, to quote from the Institute of Fiscal Studies, they say there is this inevitable trade-off coming on whether the UK government to come either raises taxes or cuts spending. They say, like, the situation the UK government is in, the only other option is to get debt. Liz Truss has shown that's quite a difficult path at the moment. And so for any future government, that is a choice. And Labour today, if all the reporting and everything that's been said by Labour sources to me and many others in the media is true, they're going to rule out some of their biggest tax levers that they have, which is why there's so much speculation, including our reporting this morning, about the other levers, what they have left. Because as Bloomberg's reporting earlier this week from Ellen Milligan said, she was talking to the former Labour leader Neil Kinnock, and he said there needs to be room to manoeuvre if they need to bring back investment, fix the public sector. And so it was funny, you looked at that debate last night you mentioned there, Keir Starmer and the Conservative leader Rishi Sunak both being grilled by Sky's Beth Rigby. For Rishi Sunak, it was all on the record and what he had done in his administration. For Keir Starmer, so much of the conversation focused on tax, something that, you know, we in the finance world care about a lot. But for the audience and for the other journalists there, it was about how do these sums all add up? And what are you going to promise us? What is going to be the pitch today? So there is a lot of pressure on Labour, both to deliver on what they put in the manifesto today, but also the expectations that they themselves are set to fix the economy and fix the state.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.